Good afternoon. I'm Tanya Williams, broker associate with Exit Strategy Realty, and today we are going to discuss how to become a homeowner with an FHA mortgage. So what is an FHA mortgage? FHA home loans are mortgages that are insured by the Federal Housing Administration. It's a government agency. Borrowers are required to pay a mortgage insurance premium monthly, which is usually around 85% of the loan amount annually. If a borrower defaults on an FHA mortgage, the Federal Housing Administration will pay off the balance of the loan and take possession of the home. And thus you have what they call a HUD home. So why do people get FHA loans? FHA loans are great for anyone that's looking to purchase a home. This is because the requirements and the guidelines for FHA is much more lenient than a traditional mortgage, and it makes them easier to qualify for. The advantages to purchasing a home with an FHA mortgage is the lower down payment and credit score requirements. For most borrowers, FHA requires a down payment of only 3.5% of the purchase price of the home. There are many potential buyers who are eligible for an FHA mortgage, and they don't even know it. Another great benefit for FHA borrowers is that the down payment can be gifted to you. The down payment of 3.5% can be a gift as long as the person gifting the down payment meets FHA guidelines. So it can be a relative, it can be a charity, it can be your employer or a workers union. Even a friend can gift you the funds for your down payment as long as the friend has a vested interest in you. Okay? This is a way that FHA can provide the borrower with 100% financing with no down payment out of pocket. However, you will need to fill out a gift letter for the mortgage down payment, and the lender will provide you with that. Another great advantage of FHA mortgages are the lowering of the closing costs. FHA allows home sellers to credit up to 6% of the sales price towards your closing costs. And there are many great down payment assistance programs available. And some buyers are able to purchase a home with as little as $1,000. So who is a candidate for an FHA mortgage? Any borrower with a low credit rating, anyone that cannot afford a large down payment. If you are receiving your down payment as a gift, if your debt to income ratio is high, and also for first-time home buyers. So what is needed to qualify for an FHA mortgage? To qualify for an FHA loan with a down payment as low as 3.5%, you'll need a credit score of 580 or higher. Those with credit scores between 500 and 579 must make down payments of at least 10%. However, it is not likely that you will be approved as a subprime borrower with a credit score below 580. If your score is below 580, it is highly recommended that you improve your credit score before applying. I actually recommend that you get it up to at least a 620. You're going to need 2 years of verifiable employment history and a debt to income ratio of 56% or less. So what are the FHA loan limits? Well, the property must be a 1 to 4 unit residential property, meaning a single family home or condo, a 2-unit building, a 3-flat building, or a 4-unit building. For the 1 unit, the purchase limits are $294,515. For a 2-unit building, the purchase limit is $352,950. For a 3-unit building, the limit is $426,625, and for a 4-unit building, the limit is $530,150. Now, can you buy a home after foreclosure or bankruptcy? Yes. Yes, you can. Just because you filed bankruptcy or if you've gone through a foreclosure doesn't mean that you cannot qualify for an FHA mortgage. For Chapter 7, it must be 2 years from the date of discharge, and you must be able to show 2 years of good credit history. Some applicants may be eligible after 12 months if the bankruptcy was caused by extenuating circumstances beyond your control. If you filed in Chapter 13, you must be in good standing for at least 1 year with a satisfactory history of on-time payments. An applicant must also receive permission from the bankruptcy court in order to enter into a mortgage transaction. What if you're going through a foreclosure or a deed in lieu? It must be 3 years from the date of the foreclosure. The lender may grant an exception to the 3-year requirement if the foreclosure was a result of documented extenuating circumstances that were beyond your control. And documented is the key word here. If you've gone through a short sale, an applicant who participated in a short sale may be eligible for an FHA mortgage if you were current with monthly payments in the 12-month period prior to the short sale. If you are in default at the time of the short sale, you won't be eligible for an FHA mortgage for at least 2 years after the sale date, but you can qualify. Now, you can also borrow cash for repairs. FHA has a special loan product for borrowers who need extra cash to make repairs to their home. So the chief advantage of this type of loan is called a 203K rehab loan. This loan amount is not based on the current appraised value of the home, but on the projected value after the repairs. We have a so-called streamlined 203K rehab program, and this allows you to borrow up to $35,000 for non-structural repairs such as painting, updating the kitchen, updating the bathrooms, any mechanical such as your furnace, your hot water tank, your central air. You can get rid of that ugly shag carpeting and put down some beautiful hardwood floors. You can either repair or replace your roof, and you can also finish your basement. So if you want to buy a home, but you don't have 20% to put down and you don't have perfect credit, no worries. No worries. FHA mortgages are the easiest type of loan to qualify for. The low credit score and down payment requirements allow more home buyers to qualify for home loans. If you have any questions, please put them in the comments section below, or you can inbox me, or you can call me, or you can text me. I am at area code 630-201-3256. And again, I am Tanya Williams, broker associate with Exit Strategy Realty, and it has been a pleasure educating you on how to buy a home with an FHA mortgage. Okay, talk to you guys soon.